All right. Randy Patrick here once again. Housing Bubble 2.0 news of the week. Yes, it's been a little longer than a week. I apologize for that. But here's the scoop. We are, I guess you could say, some of the statistics that I normally look at and we wait for are a little bit delayed now. Why? Because we're experiencing a government shutdown. So obviously some of the entities like Fannie and Freddie, FHA, whatever, HUD, there's some issues there in the Department of Commerce as well. So some of the statistics aren't available, so obviously can't comment on what you don't know or what you see or can't see, but that's the scoop right now. So hopefully that'll come in the next little while. We can get back on track with some other statistics and values and things like that. But that's really the reason why, just everyone's waiting to see what's going on here. So again, one of the things I'm going to do as well, I think looking at your comments and notes that you leave on the videos, which I do appreciate, I'll try to shorten the videos down. I will try to speak slower. I do realize that I get going and I ramble on pretty quick, so I do apologize for that, but I'll do my best I can. And as a sort of byproduct, we'll probably do shorter videos, but I'll do more videos. I might break them down into, news, statistics, investment, things like that. So I'll almost maybe make a few playlists and go from there. So that's what I'll do on a going forward basis. So you're going to see more videos, but they'll be shorter and maybe more to the point. All right, so here's the scoop. So kind of what's news of today is, 2019. So obviously we had a tough 2018, a lot of change that went on. A lot of the analysts are commenting about what's going to happen for 2019. So really the biggest risk that people see, the economists, the analysts, are really from the Fed. Will the Fed tighten up and rein in the marketplace, or will they relax and not raise rates in 2019? So based on what happened at the end of December when rates did go up, they pulled back from 3 potential raising of rates in this year back to 2. And some people are saying they're probably not going to raise rates for 2019. I guess you could say we don't really have a true indication of that. We've basically said, the Fed has said that, if they see a further slowdown in the economy, they may make some significant changes. But at this point in time, they're not really committing to not raising rates. So as far as I'm concerned, I would go on the assumption that, it's going to be par for the course. It's going to keep going on. Expect 2 increases unless, again, more information comes out that's, I guess more negative, more drastic, and they have to sort of work around that. So at this point in time, again, a lot of analysts are suggesting they won't, but until we actually hear it and see it, it could just be lip service for the markets. There you go. Now, one of the main issues that people are having concern about that could hurt housing further for 2019 is consumer sentiment, which I think is very interesting. A lot of people, a lot of economists, analysts, the whole bit, pundits that are out there have pretty much said that 2019 is going to be a slower year for housing. Nobody's actually coming out and saying, where it's going to go. Just expect slower sales, expect more inventory, etc. Now, over the past couple of months, we have seen a significant amount of inventory come on the marketplace in various locations. I expect that to continue as the months go on, and obviously as more inventory comes on, that reduces prices, that increases competition. It shifts from a seller's market to a buyer's market. But again, buyers are still on the sidelines. Buyers still want to see what's going on. So all the stuff that's come on the past month or two and will be coming on, starting now, I guess we're not going to see the results of that for probably 2, 3, 4 months down the road. So again, the transition marketplace right now, but I think everybody can agree housing will be slower. It's just to what extent this year will bring. So that's the scoop. But again, going back to the whole thing is that most people are concerned about negative repercussions from consumer sentiment being negative. And the thought process is the more negative information that we hear, we pull back, we rein it in, and we don't spend money in the economy, whether it's housing or cars or whatever else it is that we buy as consumers. That's the big concern, is that we pull back, we hunker down, we tighten up, and everything else suffers along the way. That's just the way it goes. But again, negative data, you have to take a look at it. If you're smart, you're going to look at the negative data and go, maybe I need to rein in my spending, or maybe I should wait to purchase that home, or wait for a significant change where I feel comfortable for triggering what I want to do. And that's just being smart with your money as far as I'm concerned. So what we've heard recently, I think the biggest news that's come out so far this year is the home sales and new home sales or lack thereof. So obviously we don't have all the statistics in from the government entities. So there's a consulting group. It's called the John Burns Real Estate Consulting. And if you do look at him, he does put out information. He's got a few locations across the country. He comments primarily on the real estate market with respect to new home building. He surveys, literally hundreds of builders. So his information, as far as statistically is, concerned, is pretty accurate and pretty good. So basically, he did put out some information this week, and unfortunately, the end of the year for 2018 was not very good for new housing. For the month of December, new home sales were down 18% year-over-year comparison to the previous December, which is not very good. This followed the month of November, which had a 19% year-over-year sales decline. So this is not very good for new home builders and new home developers. This was the 5th consecutive month of declines. If I go back to when it started, in August, they saw a 2% decline. September showed us a 3% decline, which is not huge, but then October rolled through with a 16% decline. And again, this is year-over-year comparing the previous year, 2017 month, and followed by November at 19% and December at 18% respectively. So ultimately, we've seen 5 months of new home sales declines, and as we all know, that the housing sector, the new home builder stocks took a hit. They had to revise their fourth quarter projections, and a lot of them are revising their 2019 forecasts for guidance forecasts for the marketplace. The hardest hit was California, which is no surprise. Sales dropped 40% in Northern California, and they dropped 49% in Southern California. That's some pretty significant numbers. This again was year over year for December. Interesting to note, though, that new home cancellations were up. And according to John Burns' report, entry-level buyers canceled or pulled the plug the most of all the segments at 18%. Move-up buyers' cancellation rate was 14%, and luxury buyers were at 11%. So when you look at these, you have home sales down double digits, almost 20%, and then you look at the cancellations, 18, 14, 11, pretty material as far as I'm concerned. We're not talking 2 or 3%. We're talking 18, 14, 11. So double digits for all the segments and above. So one of the things I think that this is interesting is because, and again, I'm making an assumption here, is that if I have a home that I'm going to purchase, a new home, and whether it's a spec home that I'm buying or it's in construction, I've probably put some form of down payment / escrow, with the new home builders to secure my position and to commit that I'm going to actually, come through with the project and actually buy the home. Well, take a look at all these cancellations. I would assume that there's going to be some sort of financial penalty if you're a buyer and you're walking away from the deal, whether that's your deposit, your escrow, whatever you want to call it. My assumption is most people would have lost that, which kind of speaks to the marketplace. So if you're going to walk away from money you've put down, home sentiment obviously has to be poor in these areas, because again, you're saying I'd rather lose my X number of $1,000 than actually have to purchase a home at a certain rate value with respect to high interest rates and affordability, et cetera. So certainly interesting to see that people are now pulling out of deals from the new home building side. Excuse me. Now, to further cloud 2019, Lennar Homes, which is one of the biggest home builders out there, deferred their guidance on the 2019, I guess you could say, projections, stating that they cannot give an accurate forecast because the housing market in the new home segment is so uncertain. So, you got to think about what's going on here. Again, we've had 5 months of declines, revised projections, for fourth quarter. Now, some of the builders did post some reasonably good numbers for the fourth quarter as far as year-end sales. Obviously, most likely due to some reductions and price points, maybe some incentives, et cetera. Maybe it's more real estate agents for bringing buyers in because they're being incentivized as well too. But again, when you have a home builder going, I can't really give you any indication as to what's happening because we just don't know, that really shows a market is in flux. And again, we don't know whether this is just, I guess, in retrospect, maybe the government shutdown and not having all the numbers ready is a blessing in disguise for these home builders, because maybe that sort of delays their numbers, which may delay stock price reductions or issues down the road. So again, very interesting to see this going on here. I don't know whether I mentioned this last time or not, the last video, but one of the things that did happen over the last month was construction layoffs. So over the past, I think the end of the fourth quarter of 2018 saw one of the highest layoffs in construction jobs, of all time. And I think it only rivaled the layoff that was in 2006, just before the housing crisis hit. So of course, at that point in time, there was overbuilding going on, and all these developments were just all over the place. And as values were dropping, they had to sell, and they were reducing price as well. So a lot of the skilled labor left the country. A lot of things changed, but that just before, like again, end of 2006 was a massive layoff in the construction industry, and we just saw it again happen at the end of the year here. So I don't know whether that doesn't bode well for the industry or for housing in general. Clearly, the builders have looked at their numbers and their forecasts. They've pulled back, saying we're not going to build as many homes out there, which that could be a good thing for values. That also may be a bad thing for other parts of the economy, because again, home building tends to do a lot of things in the economy, right? Employs people. You buy a house. What do? You buy furniture. You buy decorations. You do lawn, landscaping, lawn work. You buy lawnmowers. Potted plants, whatever that may be. You go to hardware stores. You go to the nursery stores for plants and whatever. So a lot of this stimulates the economy. And again, the ancillary service, title company, mortgages, the whole bit. So home building does influence a lot of our overall economy, which is very kind of critical to what's going on here. So again, also to note with the home builder segment here, D.R. Horton stated they would start looking at developing more solutions for the affordable housing market, which is very good. That is the market that needs homes the most, but is not being served the most by the new home builders. And reason being, when you have increased land costs, entitlement costs, lack of skilled labor, higher material costs, higher interest rates, it's tough to basically put a home up and actually make money. Again, they're not flipping and building one house, they're building segments, number of acres, developments, etc. So I think that's kind of interesting. How that's going to play out, though, I still think is a bit of a mystery. Here's the scoop. So if you're a home builder and you've bought a development, or you're doing a development, you're maybe working 200 houses, 1,000 houses, 500, whatever that number is. So you've already got your development kind of planned out. So if you're now changing that development and saying, okay, we have our projections for certain homes here, but we think we're going to change the structure and style to different, more affordable homes, that's great for you as a developer or the home builder, because you're going to change it up and try to do the best you can to bring more buyers in and make your money. But that also affects the people who already bought into your homes and your development, who may have purchased higher value homes, and it's kind of unclear now as to how that mix is going to work. I personally would be a little bit upset if I spent $450,000 for a house and my next door neighbor's new house is worth $250,000. Okay, that's not going to bode well for my resale opportunities as time goes on. But again, at the point where these guys are now, the home builders, they got to do what they got to do to make ends meet, to increase the housing supply, to make it more affordable for the average buyer. And again, housing prices far outpaced wage increases over the past few years here, and this is where we're at. So again, that's the issue that I would be facing if I was buying a new home, so certainly look out for that. Again, looks like 2019 is shaping up to be a very interesting year. A lot of speculation as to what's going on. Again, we're still at that transition point where we know inventory is coming on. We know there's going to be price reductions. We can take a look at inventory skyrocketing over the past couple of months. Now we need to wait and see how all this inventory ends up playing through with respect to sales or delay of sales or longer days on market or lack of sales. So we'll see how this will sort of come through the next few months. Here's one thing for you too. I'm going to be doing some interesting things as we go forward. Some local events on real estate training, particularly in the distressed property market, and actually dealing with how to buy and sell and do real estate investing in a dynamic, down-changing market. That's what we're going to be sort of facing the next little while here. So my first event is on February 2nd. It's a Saturday. If you are in the Tampa Bay area, I'll have a link that you can maybe register and attend the event. It's going to be an intensive day of training on all sorts of interesting things. We're talking, zombie foreclosure flipping, tax deed sales, other foreclosures, shadow inventory, fix and flip funding, I think tax liens, I said that already. Just, a lot of stuff, probates, all those things that we find, and really some interesting ways as to how you can position yourself to have 2019 being a good year to earn income and build wealth in real estate. So again, I'll have the link for that event somewhere in the comments or in the About section of the video. So again, once again, thank you for the views. Thank you for the likes on the videos. Thank you for the comments. Again, I'm listening to what you guys are saying. I think this video will be a little shorter, and I'll start doing more videos on specific topics. And I'll, of course, once we get more statistical information, I'll be putting one out for that. So again, thank you for watching, and we will look forward to speaking with you in a few days.